And I'm just waiting for it to pop up. There it is. We are on hold at 4.1%, as was broadly expected by markets and economists. Roz, so certainly no surprises and a very sort of uncontroversial exit for Philip Lowe as he presides over his 78th meeting. Now, we have standing by for us the chief economist at Creditor Watch, Annika Thompson. Annika Thompson, thank you for making the time for us. So no surprises from the RBA or Philip Lowe at his 78th and final meeting as governor.
Yeah, no surprises there. Monetary policy where it stands now is doing its job, and I think the RBA will be fairly comfortable to leave it at this level for some time, unless we get a bit of a shock in September quarter inflation, which isn't looking likely given monthly inflation continues to move in a downwards direction.
And as you sort of alluded to, I mean, the RBA has been waiting to see the full effect of the 12 rate rises wash through the economy. What are you seeing in terms of impact when you look across industries, for example?
Yeah, look, the interest rate rises have definitely hit the consumer. And interestingly, not just mortgage holders, but renters as well. It's that younger age cohort, 25 to 18-year-olds and 25 to 34-year-olds who are really feeling the pinch. And there's plenty of data out there that shows they're actually reducing their spending and their savings are also being depleted as well. So it really is a consumer recession out there, but hitting different generations in different ways.
And at Creditor Watch, you do look across what corporates are doing. What are you seeing in terms of, I suppose, insolvencies or job losses? I mean, how bad is it at the moment? And do you think we're at the peak of pain, if you like?
No, I definitely don't think we're at the peak of pain. A lot of our data it's an old cliche, but it's a bit canary in the coal mine data. So we're seeing the average size of invoices amongst our customers slowly declining, and we're seeing trade payment defaults slowly rising. So that means there are certain suppliers out there and customers out there who can't pay their bills on time. And when we see that data starting to rise, we know that business failure rates are going to rise 6 to 12 months down the track.
And I mean, when you're looking at where the RBA has kept interest rates today, do you think there's going to be more increases? So essentially, where do you think interest rates will peak and when?
Oh, look, I'm in the camp that interest rates have peaked. As I said earlier, there'd have to be something quite surprising and some quite shocking movement in inflation from here for them to go any higher. I do think, though, that they're going to be on hold at this level for some time, and that's where this cycle might differ to some previous monetary policy tightening cycles. I think the earliest we might see interest rates starting to decline might be mid next year, and that's because that services inflation side, it's still too high. It's actually still in an upwards trajectory. There's really nothing more interest rates can do for services inflation, particularly insurance and utilities and rents. But the RBA will be very hesitant to start dropping interest rates until that services inflation gets under control.
So higher for longer then, essentially. Finally, what's your view of Philip Lowe's performance as his 7-year tenure at the RBA as governor comes to an end?
Oh, look, I think in the past year, the Australian Reserve Bank has been behaving, broadly in line with other reserve banks around the globe. Inflation did catch the world by surprise in some respects. It's clear now that we gave the world way too much stimulus during the pandemic, although decisions were made, with very little knowledge at the time. So, look, on balance, I think he's done a good job. There's obviously things he said that I think he wishes he didn't at the time. But, from my point of view, I wish him all the best. And I think he's done a fairly good job in getting inflation down without causing too much pain to the economy and keeping labour force in a pretty good position, leaving it in a pretty good position.
Annika Thompson, great to get your insights. Thank you for making the time.
Thanks for having me.